Alright traders, a very warm welcome to you all. So in this video we'll be discussing about two price action secrets that you're not supposed to know. Let me ask you a simple question. How many of you have made this mistake not once, not twice, but tons and tons and tons of times, and maybe you're making this mistake right now as you trade every single day? Let me give you a little bit of a background what I'm talking about. We have established our resistance, we've established our support when we're trading. Price is moving in a consolidated area, and we are just waiting for a movement either to the downside or we are waiting for the movement to the upside because we want to trade that breakout to get that profit fast, soon, and early. So what happens is next we see a good power move all the way above the resistance. We tend to get really excited because we have been waiting for this moment. Our price has given good volume breakout above the resistance. Everything is in our favor. We buy a large quantity of stock or whatever asset you're trading at this price. And what happens? Just to find out that price, as soon as we have bought on the breakout, it has reversed all the way back to support and bounced back from here. So if you have made this mistake tons of time, and this is something I have personally done this mistake, for a very very long time, longer than I can remember. So if you have made this mistake, this is what exactly I'll be talking about. Two things: trading build-ups and power moves. How you can use both these concepts in price action to avoid these false breakout moves, and how can you trade the breakouts correctly. So this was a background of what we'll be studying today. If you have been watching our videos or if you're new to our channel, make sure you subscribe to our channel and like our videos so that we can keep on, producing such content to help you out in your trading journey. So without further ado, let's get started. Okay, so if you are in our mentorship program, so we gave you about 8 to 10 recommendations in the last 1 or 2 weeks, and about 8 of them out of the 10 recommendations I've given you have given you around 10% return already. And these recommendations we gave you are based on this concept that I'm going about to teach you. So, firstly, let me discuss on how not to trade breakouts, and then I'll discuss about how to trade breakouts and talking about the psychology in both the aspects. So, first, how not to trade breakouts. Price is moving in a range. It's giving you a good consolidated move, and when it breaks out, this is the time where we don't want to trade a breakout. See, there are two reasons that are involved. Why? So I tell my students every single day. So number one is when the markets move too fast, too soon, it's not going to be sustainable. So in this breakout example, markets have risen from the support or maybe halfway from the resistance and gone up really fast and really soon. And this is something that won't be able to sustain. Number one. Number two, you have to remember that market structure moves in a cycle, and that cycle is that there will be an expansion in volatility. It is going to be followed by a contraction in volatility, and it is again followed by an expansion of volatility. This is the cycle markets will generally and logically follow. So, in this example, you have already seen an expansion in volatility. Now, we cannot expect the move to be prolonged because we have already got a big move. Now, what we need to wait for is some kind of contraction, and this contraction can be any kind of pullback. It can be either a small pullback, or it can be a medium sized pullback, or it can be a deep retracement, the last line of defense. It can be any type of pullback. So, what I'm trying to tell you is, market needs a breather at this point. So take this example. If you are a trader, if you're trading, you cannot trade for the entire market hours. So Indian markets are open from 9:15 to 3:30, for equity. So you can't trade straight for the 6.5 hours. You will need some kind of break in between, maybe to have lunch, to have breakfast, to rest a while. If you are trading for 6.5 hours straight, you probably will be able to trade 2 days maximum, and then you'll have to see a doctor because you'll have such a bad headache. Just a word of advice. So same thing applies to a market. When there is a big explosive move, market needs a breather, and that is the reason why markets tend to go all the way back to that support. So this is the first psychological aspect why we can't trade a breakout if immediately there is a big power move happening and breaking that resistance. The number two reason why I can't trade this breakout is from a risk reward standpoint or a view. So when the price breaks out, immediately after a big power move, you have to ask yourself, what is my logical stop loss going to be? Because entering a day trade or any other trade without a stop loss is just madness, because you can blow up your account, right? So when the price has just broken out, what's the stop loss going to be? The logical stop loss is going to be below the support. You can't have a stop loss anywhere else on this chart. And this right here is a very unfavorable risk reward trade. I think all of you know that. The risk that you are ready to face is this amount. The reward that you're looking for is probably just a small penny in front of the move that has just about happened. So, just to sum it up, the move has already happened. You need a breather. If you are trading at this point right here, you are in a very bad risk reward standpoint of view. So now let me discuss how to actually trade a breakout. And remember, this is something you have to see it multiple times, and don't forget this concept. So we have to trade breakouts with a build up. As simple as that. Trading breakout with a build up. What is a build up? I'll give you an example. We are moving in a resistance support range, and now instead of going all the way back from resistance to support, now what we are doing is, when we give a good power move to the upside, we are now forming a congestion or consolidation at the resistance. The same will apply on the downside as well. When we are going from the resistance to support, on the negative side, we will start to build up or form a congestion around the support. So this is what I call a build up, when we are forming a congestion around our area of value, either of the area of value. This is what a build up is. So what are the two reasons I am recommending you to trade breakouts with a build up? Here is why. Number one, from the risk reward standpoint of view. So now if the breakout is happening on the upside, now can you tell me what's the logical stop loss? You now no longer have to put the stop loss below the support. You have to just put the stop loss below this range right here, because now you have got an intermediary support, you have a reference level, and you can have a very tight stop loss, and you can have a good and or a big target. So in the same scenario, the range was same, but just because of the build up, our risk reward has increased considerably. Same is the example on the downside. So when there is a expected down move that's going to happen, you will see a build up happening at the support, and now when the breakdown is happening, the stop loss no longer has to be all the way above the resistance. You can have a stop loss tight above that intermediary resistance, above those, the swing highs that you have just formed. So the first reason is you have a very good risk reward trade. So what's the second reason that I'm asking you to trade breakout with a build up? Understand this from the psychological point of view now. What does resistance mean? If the price moves to resistance, this means that there are a lot of sellers in the market, and predominantly, essentially, the selling pressure that is so strong here will drive the price down. Same is the case for support. Support is an area where demand is more than supply. So when you are coming to the support area of value, there will be so much demand which exceeds your supply. Prices will immediately drive up. That's the basic rules of support and resistance. Now, understand what happens in a build up. In a build up, you are forming a congestion either at resistance or support. Let's take an example of the resistance first. Now, can you understand psychologically what's happening? Now, the selling pressure that was so predominant is not so active here. If the selling pressure was active at this point, the price would have fallen down all the way to support. This is not happening, number one. Number two, from the buyer point of view, the buyers are ready to buy at a higher price. What happens is, generally, logically in the market, buyers are looking for a good discount to buy. Now buyers are not looking for a discount, they are ready, they are active to buy at a higher price. So what does this mean psychologically? That the hands have shifted, the market participants are ready to let the buyers now come into the picture. This is also what resembles a high and tight flag, as some of you would call it, but I like to call this a build up. The same example on the downside also, you know, at what happens is at the support there's a lot of buying pressure, but when there is a build up that is happening at the support, this means that buyers are not very strong, but the sellers are willing to short to sell even at such a lower price. So this means sellers are becoming more and more active and a big sell off is about to happen. So just to recap two things, we are not going to trade a power move leading to a breakout. That's something we are not going to trade. We are looking to trade a breakout with a build up, and then we will be trading that. So I hope you have understood what I have discussed. Let's now talk about some examples so that we can make this concept more concrete, and let's discuss a lot of examples so you can get this drilled into your head. All right, I hope you've understood the theoretical part of what we're discussing today. Now we come to the more important part, which is the practical applicability. How can we apply the concepts that we have just learned into the markets? So make sure you watch all the 5 examples that I'll be discussing because they're all different in some aspect. So we'll start with what are build-ups and then we'll go to the power moves section. So this is the charts of Gujarat Gas, a great company. 4 hour charts. The sector has been in focus in India for a while now. And the first job that we have to do is establish our support resistance area of value levels. So we can see a good support at the 280 zone, and the resistance one comes around 310. It's given a good selling pressure to the stock, and also we have got a resistance 2 at 330 round number. So what I am trying to tell you is that whenever a power move happens, so this was a power move that happened, 3 consecutive candles give a big pressure. If something like this happens and drives the price higher above the resistance, the breakout will not sustain. But in this example, you can see very clearly that we have started to build up around this level. What do I mean by that is, see, if you see the first test of the resistance, we immediately touched this level and fell down to support. We again came back to this level, got a lot of selling pressure, again fell down to support. Now, when we have a power move driving up to the resistance, we should fall down back to support if the selling pressure is still there. But instead, what is happening is we have started building up and forming a congestion consolidation at the resistance, which means buyers are ready to buy at a higher price. So now things are simple to you. You know that you should start to expect a breakout when you are going to go out of this region. So it's very simple that if you go long on this trade, the stop loss now will come around 295, the below this low of formed by the previous candle, and instead of having the stop loss all the way to 278. So in a way, with this setup, you are actually, ensuring yourself against less risk. So you are putting a tight stop loss and the targets will be coming just below the resistance. You don't want to keep it at the resistance because it is a zone. You can bounce back before you hit that zone. So this area becomes the target and you have a very small stop loss. So it's like a 1:1 trade. Not a very good risk reward trade, but I hope you get the idea of what I'm trying to discuss. So you got to move into the resistance, some kind of consolidation, congestion, wait for the breakout, tight stop loss, and big target. Let's get into another example. This is the charts of Avanti feed on the 1 hour time frame now. This is an inverse example of what happens with a breakdown. So the first rule is establish your zones. We can see a very strong resistance at the 490 level that's forming up for quite some time. And once we are breaking out, after that, we can see from the 29th of June, we have started forming lower highs. The stock price has been forming lower highs and lower lows. So this is a clue that there is some kind of bearishness in the stock, that the stock is not very strong and some kind of big sell-off can happen. But remember, these are just clues. We have to try to gather as many clues as possible so that we can trade profitably, reduce the risk. And the best part was When we finally hit this lower high, we have started building up at this level. So now if you compare what was happening before, when you hit this support, you immediately bounced up. But now when you're coming back to the support of 490, instead of bouncing back up to 505, which is the previous high, we have started forming a build up or a congestion. What does this mean? Very simple, that the sellers are still selling at such a low price. They are willing to take the risk. This speaks a lot about the psychology and the emotions that are going into the market. So this was a very good trade. Whenever you are breaking down, this is a great breakout. You can have a good risk reward trade here. You can short the stock here, have a tight stop loss, and targets can become big. You can trail the target. So you had a 1.5 sort of risk reward trade here. So this actually makes a lot of sense. So rather than just jumping in and seeing the move being emotionally unstable, you can use build ups to trade. A final example in the build up section is the charts of ICICI Securities. Again, on the 4-hour time frame, we saw very good resistance being formed at this level. It was tested again here. So you can see whenever you come to the resistance, there will be a lot of selling pressure to drive the stock all the way down. But when you broke out, you again saw the retest of resistance as support. This is price action trading 101. And again, when you're coming back to this level, you can see a hammer candle formation, which is giving you indication that this level is quite strong. But now what happens is when you are breaking below this support region now has to become a resistance. And when the price comes back to resistance, as we saw earlier, there has to be some kind of sell off that happens in the market. But instead, what happened was when we came back to retest that resistance, we started building up. Rather than just, exploding out, in one go giving a power move, we started building up at the resistance. This is just showing us buyers are ready to buy at such higher price. The selling pressure has completely exhausted in the market. And if you get this move, immediately buy, tight stop loss at 270, and targets can be huge. The number one target can be at 337, number two target at 364. So as I said, big targets and small stop loss. So that's what the build up is all about. And finally, we come to the concept of power moves. And as I said, I'll be discussing two things in this video. This is a very short concept, so watch for another 2-3 minutes to get an idea because it's very, very important. So, build ups is about trading the breakouts. But power moves, as I said in the introduction, whenever a power move will happen in the market, and I gave you a lot of examples also that whenever you get a power move into the market, it will not break out but it will reverse. So, this is a very good reversal setup that you can incorporate in your trading style. Power move basically means big candles going right into the area of value, either into support or either into resistance. So as I said, you need some kind of breather. If you are going explosively into an area of value, some kind of congestion or some kind of pullback has to come in the market. You can't do a breakout. The breakout will come if you give a power move and start to do a congestion consolidation, then the breakout can happen. But generally, when a power move happens, I am looking for a reversal trade setup. Charts of Avanti feed again on the 1 hour time frame. This was a very strong resistance being tested a couple of times, and you can see here a big power move driving the stock right into resistance. So, as I said, you need a breather. The breakout will not be happening. Please remember this is what helps me as a trader. This might not always happen, so do backtest these things I'm telling you. So what you are now looking for when a power move comes and drives you into the resistance, you are looking for a candlestick entry, and you can see a dark cloud cover candle being formed here with a good amount of volume. So this is a good entry that you can do here. Have a good target, have a tight stop loss above the resistance, and this should probably help you out in your trading setups. Let me look at one more example on the charts of Godrej Properties. This is a 30-minute charts. So I'm showing you different time frames so it can help you all set of traders, whether you're a long-term investor, a medium-term, short-term trader, or a day trader. 30-minute charts for maybe if you're doing a day trade or a BTST kind of trade. You can see this was a very strong level of resistance for Godrej Properties, and it's being held a lot of times. Around 9 to 10 times the level has been tested, and around the 17th of July we see a big power move that's happening on the stock. Let me get the pen out. So we can see a big power move that's happening on the stock. I've told you already, if a power move happens and drives the stock back into resistance, the breakout is not going to happen. Be prepared. Don't get excited. What you can do instead is look for a shorting opportunity now. You can see a good spinning top doji followed by a shooting star formation. Go short on this time and get this profit. Why? Because some kind of breather will happen in the market. Markets have to go in a expansion, contraction, expansion phase. So this is what we are taking benefit of when we are trading the power moves. So that's all for today. I hope you have enjoyed this video. These are two concepts that you have to incorporate in your trading style. It's personally helped me alleviate my experience. And as I said in the last 10 to 14 days, I gave 10 calls in my mentorship group, and we got around 8 out of them right, and they gave about 10% return immediately in less than a week's time. So I hope you like this video. Do give us a comment on what you are doing and how you like this video, and what other videos that you would like us to see. Give us a thumbs up, subscribe to our channel, and if you want to learn more of these things in a structured manner, you can hit us on our website or on our Instagram. We are offering one-on-one mentorship programs to help you increase that profitable trades that you're looking after. All right, and I'll see you next time.